Welcome to the Deep Dive, the show where we try to cut through all that noise and really get to the core insights on complex topics. Today, we're taking a close look at Micron Technology's fiscal Q3 2025 earnings call. We want to figure out what these results and some pretty big recent news really tell us about where the company's heading, especially in this memory and storage market. So for this deep dive, we're using the official remarks in the slide deck from Micron's financial call that was held June 25th, 2025, and also looking at some recent news reports about the company.
Yeah, and I think what's really fascinating here is that this isn't just about, crunching numbers. These reports give us a real snapshot of Micron right now. They're in the thick of this huge tech evolution, especially with AI just exploding. You can feel they're at a pretty critical point.
That's a great way to put a critical inflection point. Okay, so our mission today. Let's unpack the key numbers, the big strategic moves, the market trends. Basically, give you a clear picture of how Micron's doing and where they might be going. Are they really set up to grab this AI opportunity? Let's dig in. Let's maybe start with the stage setting, because there was definitely a buzz around Micron before the official call even happened. Market sentiment was generally pretty positive. And the stock, well, it jumped about 5% almost immediately after the report came out. We also saw some, let's say, unusual options activity and analysts bumping up their price targets. Seems like investors are definitely interested, right?
Oh, absolutely. But it's more than just a reaction to one good quarter, I think. It feels like it's tied into a belief in their longer-term vision, these strategic shifts they've been making. They're playing the long game, especially with AI.
Right. Speaking of those shifts, back in June 2025, Micron did a pretty significant reorganization. They basically reshuffled their business units to align better with key market segments. And the goal seems crystal clear. Go hard after AI growth. They're pushing more resources towards AI-focused opportunities right across the board. That feels pretty proactive, doesn't it? Like they're trying to get ahead of the curve.
Definitely proactive. And it's not just moving boxes on an org chart. Look at the investment plans they've announced. We're talking approximately $200 billion in the U.S. over the next 20-plus years. That breaks down to like $150 billion for manufacturing, $50 billion for R&D. And get this, that includes an extra $30 billion on top of what they'd already flagged. That new money is going into a second big memory fab in Boise, Idaho, expanding their Manassas, Virginia fab, which serves automotive, aerospace, that kind of thing, and, crucially, bringing advanced packaging capabilities onshore to the U.S. That's vital for HBM growth. It really makes you wonder, what does this level of investment mean for competition down the line and for supply chain security?
That's a huge point. I've been thinking about that too. These massive investments, especially Boise. It feels like more than just adding capacity. It's a strategic play for a more resilient U.S.-based supply chain, right? And they're making progress. The first Idaho fab, ID1, apparently had a key construction milestone in June. They're expecting the first DRAM wafers out of there in the second half of calendar 2027. And interestingly, the second Idaho fab, ID2, is actually planned to start production before the first one they're building in New York. They say it's about economies of scale, having R&D right there.
Exactly. It's about more than just output volume. It's strategic positioning. It's about strengthening domestic manufacturing, building that resilience we've talked about. It signals a really serious long-term commitment.
So underpinning all this ambition, especially for AI, has to be the technology itself. What's enabling this? Well, they're highlighting excellent progress on their next-gen DRAM tech, the 1-gamma node. Apparently, the yield is ramping up even faster than their previous record with the 1-beta node, and they've already started sending out the first qualification samples of 1-gamma-based LP5 DRAM.
And 1-gamma is a big deal technologically. It uses EUV lithography, which allows for about a 30% jump in bit density, more memory in the same space. Plus, you get over 20% lower power consumption and maybe up to 15% higher performance compared to the current 1-beta stuff. Micron's planning to use this across their whole DRAM product line, so it's a foundational improvement.
Okay, shifting gears to NAND flash memory. They mentioned hitting a record high mix of QLC bits, that's quad-level cell, so more storage capacity per chip, usually at a better cost point. They're also qualifying new high-performance SSDs using their G9 2TB QLC NAND. And they teased an upcoming announcement, a new G9 QLC SSD with some proprietary adaptive write technology that they claim makes writes 4 times faster.
Now, that specific tech, the adaptive write, is actually quite interesting for you to keep an eye on, because if it delivers, it could really broaden the appeal of QLC SSDs. If you can get performance that feels like the more expensive TLC NAND for most typical consumer stuff, well, that makes those higher capacity QLC drives much more attractive.
Good point. Now let's talk HBM high bandwidth memory. Absolutely critical for AI accelerators, right? Micron noted their HBM3E, the 36 GB 12 high stack, is designed into AMD's new Instinct MI35X GPU. And they're already shipping HBM in high volume to 4 different customers now, covering both GPUs and custom AI chips, ASICs. That sounds like solid traction.
It is solid traction, but they're already talking next gen. HBM4, this uses their proven 1 beta DRAM tech. They're aiming for bandwidth over 2 terabytes per second per stack. That's like a 60% performance boost over the previous gen. And they're claiming 20% lower power consumption compared to their current HBM3E 12H product. They've already sent samples out to customers, and they're targeting volume production in calendar 2026. Seems well aligned with where the AI hardware guys are going.
And it's not just HBM in the data center. They highlighted being the only supplier of low-power LP DRAM for servers. Apparently, their high-capacity DIMMs in these LP server products pulled in multiple billions in revenue just in fiscal 2025. That's a 5-fold increase year over year. Pretty remarkable growth there. Okay, so we've talked strategy, investment, technology, but does it all add up? Did it translate to the bottom line in Q3? Let's finally dive into those official fiscal Q3 2025 financial results. What did the numbers actually show?
Well, short answer, yes. Micron definitely delivered. They hit record revenue for the quarter, and importantly, revenue, gross margin, and earnings per share, or EPS, all came in above the high end of their own guidance range. Plus, they generated a really substantial amount of free cash flow. That's always a key sign of operational health.
All right, let's break down some of those headline numbers. Total revenue for Q3, a record $9.3 billion. That's up 15% just from the previous quarter and a huge 37% jump compared to the same quarter last year. Clearly shows strong demand. Drilling down a bit, DRAM revenue was $7.1 billion, making up about 76% of the total. That was up 15% sequentially and, wow, 51% year over year. Bit shipments were up over 20% sequentially, though prices dipped slightly due to, they said, a higher mix of consumer stuff. And NAND, that was $2.2 billion, about 23% of revenue, also up sequentially 16% and up 4% year over year. Bit shipments grew in the mid-20% range, but prices there decreased in the high single digits.
And the profitability story was strong, too. Consolidated gross margin hit 39.0%. That's up 110 basis points from Q2 and beat their guidance midpoint by 250 basis points. Better pricing for both DRAM and NAND helped there. Operating income landed at $2.5 billion. That gives you an operating margin of almost 27%, which is up nicely sequentially, and a massive 13 percentage points better than last year. And the non-GAAP diluted EPS, that was $1.91, well above their guidance again. That's 22% growth sequentially and over 200% growth compared to Q3 last year. So not just a little bump, it signals real improvement in the market and their pricing leverage.
What about cash flow and the balance sheet? Sounds like they did well there too. Operating cash flows were over $4.6 billion, free cash flow. Over $1.9 billion, they said that's the highest quarterly free cash flow they've had in over 6 years. That kind of cash generation gives them a lot of options. They also ended Q3 with a record $12.2 billion in cash and investments, total liquidity almost $16 billion. And they did some debt refinancing too, pushing maturities out. Seems like a very solid financial footing.
Absolutely.
Yeah.
And if you connect that back to what we discussed earlier, that strong free cash flow and healthy balance sheet, that's what gives them the flexibility for those huge future investments, that $200 billion plan. And it helps them navigate any bumps in the market cycle, too. It's a really strong foundation they've built.
Okay, let's look at the business units. Did the growth come from everywhere? Well, compute and networking, CNBU hit a record $5.1 billion, up 11% sequentially, and they said that was mostly driven by a nearly 50% sequential jump in HBM revenue. So AI is definitely driving that. Mobile MBU was $1.6 billion, up a huge 45% sequentially. They attributed that to customers working through inventory and strong demand for phones with more DRAM. Embedded EBU, $1.2 billion, up 20% sequentially. Growth in industrial and consumer embedded markets there. And storage SBU, $1.5 billion, up 4% sequentially, mainly driven by consumer SSDs. So yeah, pretty widespread growth.
It really is. And it's showing up in market share, too. They mentioned hitting new quarterly records for share in both data center SSDs and client SSDs back in calendar Q1. And for the first time ever, apparently, they became the #2 brand by share in data center SSDs. That's significant. It shows they're not just riding the market up, they're actually gaining ground competitively.
Okay, so what's their view on the end markets going forward? What's the outlook? For the data center, they see the calendar year 2025 server market growing mid-single digits overall, but heavily driven by AI servers naturally. PCs, they expect low single-digit unit growth, helped by AI PCs coming online and Windows 11 upgrades. Smartphones, also low single-digit unit growth projected, but again, AI is the story there, driving DRAM content higher. They expect more phones shipping with 12 GB or more, up from today's average of around 8 GB.
And we shouldn't forget automotive and industrial. Those continue to grow too. Things like more advanced driver assist systems, L2, L3 ADS features, and AI in-car infotainment systems. All that keeps pushing demand for more memory and storage.
All right, so what about the overall market supply and demand picture? How are they seeing that? They said customer inventory levels are generally healthy now, though there were some tariff-related pull-ins, maybe. For calendar year 2025, Micron expects industry-wide DRAM bit demand to grow in the high teens percentage range. For NAND, low double-digit percentage growth. But here's a key point. They expect their own bit supply growth for non-HBM DRAM and for NAND to actually be below that industry demand growth.
Right, and that points to very deliberate supply management. They're being disciplined. For instance, because their node transitions are so efficient now, they'll actually end fiscal 2025 with about 10% less NAND wafer capacity structurally than they had in 2024. They plan to manage the pace of these conversions carefully, keeping it in line with demand, which makes sense because each new tech node pumps out significantly more bits per wafer.
Okay, one other thing floating around. We saw some press reports about them ending production end of life or EOL for older D4 and LP4 products. What's the story there? It seems these are mostly made on their older 1 alpha DRAM node, not the latest 1 beta or the upcoming 1 gamma. Micron apparently sent out the EOL notices months ago for the big volume segments, mobile, client, data center, consumer, with final shipments happening over the next, 2 or 3 quarters.
Yeah, it's important to understand this is pretty standard stuff in the memory world. It's a typical generational transition. It lets them focus resources on the newer, better tech. Now, they will keep supporting customers who need long-term supply, think automotive, industrial, defense, with those 1 alpha products for several more years. But it's telling that for the high-volume markets, they're already seeing shortages pop up for D4, and Micron is actually on allocation for those parts now. It signals supply is tightening for the older stuff as the industry moves on. D4 revenue is becoming a pretty small part of their mix anyway.
Okay, makes sense. So looking ahead, what can we expect for their next quarter, fiscal Q4 2025? What's the official outlook?
They're expecting revenue growth again, and they said it'll likely be weighted more towards DRAM this time. That's going to be helped by strong pricing, a better product mix, probably more HBM and high-end stuff, and ongoing cost improvements. All those things should help boost gross margins further, so profitability looks set to continue improving.
And the specific numbers they guided to for Q4, revenue, $10.7 billion, give or take $300 million. That would be another record quarter if they hit it. Gross margin, forecast in the range of 42.0% plus or minus 1%. That's a nice jump from Q3's 39%. Operating expenses, around $1.2 billion, plus or minus $20 million. They said that's driven by planned R&D spending on future tech nodes and HBM development. Makes sense. And non-GAAP EPS guidance is $2.50 per share, plus or minus 0.15 cents. Again, strong continued growth there. Oh, and capital spending for the full fiscal year 2025 remains unchanged at about $14 billion, mostly going towards HBM, building facilities, back-end manufacturing, and R&D.
And tying into that supply discipline we mentioned, they expect to finish fiscal 2025 with DRAM inventories being quite tight. NAND inventory is significantly lower than they are now, and their overall inventory days, DIO, getting close to their target levels. So that inventory position, plus what they see as a constructive demand environment, should let them keep focusing on improving prices and shifting their mix towards higher value products.
Okay, but wrapping it all up, maybe the most telling part was the overall tone from the CEO. What was the key message you took away about their confidence and direction for the full year?
Yeah, the confidence was palpable, I'd say. The CEO basically stated they believe their strategy, their tech leadership, and their execution puts them squarely on track to deliver record revenue for the full fiscal year 2025, along with solid profits and free cash flow. And crucially, doing all that while making these massive investments to meet that surging AI-driven demand for memory. They sound very confident in their positioning right now.
So pulling it all together, what does this mean for you, our well-informed listener? We've really dug into Micron's strong Q3, these huge investment plans, and this strategy that's just laser-focused on AI.
I think it really underscores how absolutely vital memory and storage are becoming in this AI revolution. It's not just a component, it's an enabler. And based on these results and their outlook, Micron seems exceptionally well placed to really capitalize on this whole era. They're not just supplying parts, they're driving innovation.
Absolutely. So here's a final thought for you to maybe chew on. How might Micron's specific tech advancements like HBM4 and that 1 gamma DRAM not just keep up with AI demands, but actually accelerate them? Could they unlock new possibilities for future AI applications? And maybe think about the ripple effects too. What could this massive multi-billion-dollar U.S. investment mean for the global chip landscape, for innovation, for supply chains, decades down the road? It feels bigger than just one company's earnings.
Lots to think about there. Well, thank you for joining us on this deep dive today.
Yeah, thanks for tuning in. Keep learning, keep questioning, and stay well informed.